Welcome to the weekend edition of Fear and Greed Business Headlines, the week that was. A wrap of the biggest stories over the past week. I'm Sean Aylmer. It was a week of climate change, corporate deals and squibbing on vaccines. Global markets bounced around a bit this week, rising early, then falling, before rebounding again. Most are gyrating. Now there's a word we don't normally use on Fear and Greed, gyrating alongside the ebbs and flows of coronavirus news. However, late in the week, commentary that the Biden administration was considering raising capital gains taxes for the wealthy in the US sent a shudder through Wall Street. No surprises there. The price of oil trended lower during the week. Good news for the Bowser. Gold was mixed, as was the Aussie dollar. Bitcoin hit a record and then tumbled some more. By the end of the week, it was trading around $50,000 a unit, down more than 20% for the week. The Bank of England talked about establishing its own cryptocurrency, the Britcoin, and speculation continued about the sustainability of digital currencies. One commodity that did have a good week was iron ore. It hit a new record high, just below $190 a tonne. Iron ore, of course, is Australia's biggest export, and the surging price is good news for BHP, Rio Tinto, and Fortescue Metals. It's also great news for the federal budget bottom line. Iron ore prices are 3 times the level assumed in the budget last October. When we get our annual accounts in about 3 weeks' time, things should look much better. In international news, President Joe Biden and Japan's Yoshihide Suga met and said they'd oppose coercion and force in the Indo-Pacific region. China was not amused. 6 English Premier League clubs said they were joining 3 Spanish and 3 Italian clubs to form a new Super League. That triggered wailing and gnashing of teeth across all of England and knocked COVID-19 off the front pages. Then, 2 days later, the whole thing collapsed. Earnings season kicked off on Wall Street. The highlight was IBM reporting its 11th consecutive quarter of revenue growth. The low point was Netflix's disappointing subscriber growth numbers. Some of the COVID stocks ain't looking so good as the economy rebounds. And the Bank of Canada has become the first central bank of a major economy to signal a tightening of monetary policy as the country rebounds from its pandemic-related recession. Wonder what the local Reserve Bank thinks of that. As always, there was plenty of economic news. Last week, the big bank chief executives talked up the economy, and the data out this week showed why. Business investment intentions over the next 12 months are at their highest level in 27 years. 27 years. Extraordinary. And retail sales jumped in March after a slow couple of months. Retail sales make up around 20% of the economy. This week's figures show that during the first 3 months, retail sales actually went backwards, which doesn't augur well for the March quarter economic growth figure. It was a big week on the COVID front, with good news and bad news. The number of cases continues to expand, with India this week recording 314,000 cases in a 24-hour period, the highest number of any country in a single day. It triggered a response from the Australian government, which put restrictions on travellers from India and other hard-hit COVID countries. There was the usual debate around vaccines, and essentially it's come down to this. Yes, 1.8 million people have been vaccinated, but the rollout is being hampered by a lack of supplies, and some people probably won't be vaccinated before the end of this year. AstraZeneca is a jab de jour for over 50s and Pfizer for the young'uns. New South Wales and Victoria want to open mass vaccination centres, but don't have the drugs. It all means no international travel this year, unless, of course, you're heading to New Zealand. Financial advisors were back in the spotlight this week. 3 years after the Hayne Royal Commission, Federal Treasury will review the sector with a view to the quality and affordability of advice. As I said on the day, this is an industry that's been decimated by convoluted changes to legislation, remuneration challenges, and a few bad apples. The number of planners by 2023 will be 13,000, about half the level as before the Royal Commission. Yet, as a COVID-induced recession showed, investors need expert advice more than ever before. China's man in Canberra called Australia conniving and said we had acted unethically, illegally, and immorally when suppressing Chinese companies like Huawei. Yeah. This story is becoming a bit like the little boy that yelled fire again and again. Mind you, it's not as if we were sitting back and doing nothing. Canberra forced Victoria to cancel 4 contracts it has with overseas countries, 2 with China and 1 each with Syria and Iran, saying they weren't in the national interest. Data showed house prices rising, no surprise there. though it was notable that the median price in Melbourne has pushed beyond $1 million for the first time. All the bank CEOs were in front of Senate estimates a week ago, and ANZ boss Shane Elliott predicted a 17% jump in prices this year, while his peers at the other three majors forecast a 10% increase. NAB's chair Phil Cronican warned this week that house prices were so hot, regulators would eventually be forced to step in and dampen the exuberance. The Prime Minister announced the Royal Commission into veteran suicide to examine how people are treated in the military and when they got home. It's a well-deserved victory for activists who have campaigned for looking after military personnel for many years. In corporate news, AMP, what to say? At least there's now a plan. The once blue-chip stock hit a record low this week of $1.13 a share, immediately before the group announced that it would spin off AMP Capital's private markets business onto the ASX. Bo Pahari, who is the centre of much of the controversy after being appointed CEO of AMP Capital in the middle of last year, before stepping back over allegations of inappropriate behaviour to a female staff member, will finally leave the company. Let's hope the long-suffering shareholders get some sort of good news in the next few weeks. Crown Resorts is well and truly in play. A week ago, 37% shareholder James Packer agreed to only vote his shares in relation to corporate activity, but he would stay away from influencing the company otherwise. Crown is under takeover offer from private equity group Blackstone in a bid worth $8 billion. Then early this week, investment group Oaktree outlined a plan to buy out Mr. Packer's holding for about $3 billion. On top of all that, the gaming group is facing inquiries in Victoria and Western Australia, where it operates casinos, and it still hasn't got a licence for New South Wales. Crown's board has remained tight-lipped, but will have to respond to all this activity sometime soon. Origin had a tough week after receiving an arbitration ruling that will force the company to pay about $40 million more in gas costs this year and $80 million more next year. Its share price tumbled. Its major competitor AGL had arguably even a worse week after its chief executive of 2.5 years, Brett Redman, quit the company. Mr. Redman was the architect of the strategy to split the company into two, one housing its coal-fired power stations and the other would retail net zero carbon electricity. Mr. Redman said he didn't think he could see through the strategy to its endpoint. It was a landmark week for retailers when landlord Fortius Funds Management sued the Just Group, which includes retailers like Peter Alexander, Just Jeans, Smiggle and Portmans, for unpaid rent. During 2020, Just Group refused to pay rent, saying foot traffic had disappeared. It was one of the biggest issues for property groups last year, and they lost hundreds of millions of dollars. Fortius is fighting back. Lithium producers Galaxy and Orocobre said they'll merge, creating a $4 billion miner on the ASX. Lithium is a hot commodity at the moment. Challenger disappointed investors by saying that earnings this financial year would hit the bottom end of its target range. Its share price tumbled. Latitude Financial listed on the bourse after 2 aborted attempts. It ended its first day up 4%, worth about $2.7 billion. Latrobe Financial is now considering doing the same thing. And for the sentimentalists, the purchase of Coca-Cola Emmental by Coca-Cola European Partners was approved this week, ending more than 50 years on the ASX for the group. Now I get to the point in the program where I go through the biggest story of the week, the sleeper story, the most remarkable story, and my favourite story. The biggest news story of the week was climate change. It's probably the biggest story of the decade and possibly the century. This week was all about President Joe Biden's climate change summit, held virtually, with 40 countries attending alongside business leaders and religious types. Big Joe said he'd slash coal and oil production in the US. President Xi Jinping said everyone needed to work together under the United Nations umbrella, and China was doing a very good job. Vladimir Putin from Russia detailed plans to cut emissions, while Japan and Canada both outlined new targets. Prime Minister Scott Morrison said Australia would spend $500 million on hydrogen and carbon capture and storage, but the rest of the world needed to help. And he keeps refusing to nominate targets. Canberra isn't taking this seriously. Politics over leadership, I'd say. ScoMo will never be mistaken for a progressive. Maybe comments from the Reserve Bank Board and the Australian Prudential Regulation Authority this week that climate change was a challenge for the economy and financial stability might edge the coalition government closer to doing something serious. The sleeper story of the week involved property group Mirvac. It said it was on track to fully lease its first ever build-to-rent project in Sydney Olympic Park. It's an interesting concept and relatively common around the world, particularly in Europe. The apartment blocks are built specifically to be rented out for long terms. It provides security of tenancy and the owner gets a premium rental rate. With house prices rising so quickly, not owning a home will become more common. Build-to-rent projects will grow and become a more important part of the housing market in decades to come. That's why it's a sleeper story. The most remarkable story involved buy now, pay later group Afterpay. It's considering listing on Wall Street. In itself, that's not remarkable. Afterpay's future business growth is in North America. Wall Street has much deeper capital markets than Australia. What's remarkable is that a business that none of us had heard about 5 years ago has grown so fast and is so big, worth around $36 billion. So big that it can move to the US. Whatever you think about Afterpay, it's been an incredible success story. And my favourite story this week was actually my least favourite. American fast food chain Popeyes might be heading to Australia. US-based Restaurant Brands International is looking for a local partner to bankroll the launch of the burger joint founded in New Orleans in 1972. It mostly sells fried chicken and wants to take on KFC, Porto and Red Rooster. Do we really need another fast food outlet? And that's everything you need to know from last week. I'm Sean Aylmer. I'll be back on Monday morning with the Fear and Greed business headlines. I look forward to your company then.